Hello and welcome into the KE Report. I'm your host, Shad Markwitz. We're getting an update today from Peter Krauth, author of the book The Great Silver Bull and editor of the Silver Stock Investor newsletter. And we'll put a link to the Silver Stock Investor down below so you can follow along with Peter's analysis on the silver sector. As far as I know, he's the only newsletter writer really focused exclusively not just on the silver stocks, but also on silver itself and looking at everything from the physical side of things to the ETFs, but obviously diving down into the silver equities. And Peter, great to have you on the show to get an update on how you're looking at things. I guess first and foremost, let's start off with we're having a rally in both gold and silver. Gold just keeps ratcheting to all-time highs. It seems like we've had over 35 or 37 new all-time highs just this year, where it keeps poking its head a little higher, and people have been waiting for silver to catch up. Now silver has blasted up above 32, and some people think it's getting near some key overhead resistance where if we see another move higher, maybe we get a run in the silver price. How are you looking at silver itself?
Well, thanks for having me again, Shad. I really appreciate it. It's always fun. And so you're right. Gold has been making new all-time highs. Silver has run up in the last few days, really, has popped its head over the $32 level. We're just below as we speak. But I'm going to say, in complete honesty, I think that we may be due for some kind of a digestion phase at this point. More so in gold, frankly, than in silver. I think silver would be affected by that, but gold has just added $100 to its price over the last sort of 4 to 5 months so consistently. And if you look at the percentage gains, I haven't done the math, but I know that it's quite substantial compared to where it was maybe a year and a half, almost 2 years ago. And so I think that sentiment has started to catch up. Sentiment has not followed these gains, but I believe that it's starting to. People are starting to get more excited. I think the generalist investors are starting to get more excited seeing gold in the high 2600s. And I just am concerned. Maybe I'm a little bit jaded from having been around this sector for too long, but I just can't help but think that these are really hefty gains that have come in a relatively short time. It wouldn't cause me to sell anything, but it would make me sort of conservative about and cautious about adding. And so I just think that it's time to be careful. Hey, maybe I'm wrong, but we could over the next month to month and a half see things consolidate, maybe even a pullback, especially in gold, which has had the biggest gains. Silver would follow that, but I think that it would correct probably less than gold would. If that happens, both will make for fantastic, new buying opportunities. But it is, not to rain on anyone's parade, but these are for sure exciting times to see silver back around the $32 level, to see gold at all-time highs is fantastic. It's great that it's drawing attention. It deserves it after all this time. We're going to have to watch over the next sort of month or two what happens. We're about a month and a half away from an election in the US. And so, anything can happen. Let's just put it that way.
Well, yeah, there are a lot of uncertainties coming into the market in the next couple months with the U.S. elections, with what's happening with central banks and the continued cutting cycle. There's obviously geopolitics all around the world, but there's also things that have been developing with China and the real estate market. So there's a lot of balls up in the air and nobody knows where they're going to land. So even if we had a corrective move, just a quick follow-up on that, Peter, a
Mhm.
lot of people look at the gold silver ratio and they're looking at how is silver doing relative to gold. And with gold having tacked on so much so quickly over the last, let's say, 3 to 5 months, is there still room if they both consolidate, even if they correct down a little bit? Is there room where silver can keep gaining on gold and lowering that gold silver ratio?
Absolutely. And I think it probably would. I think that because gold's gains have been relatively stronger, I think it is more at risk for a bigger correction. And I think that any correction in silver would be tempered versus gold. And so that, it might sound counterintuitive, but the gold silver ratio is not only indicative. And when it rises, it doesn't just mean that gold's rising faster. It can also rise when silver's falling more slowly than gold. And so that's something for investors to think about. And I have a feeling that may actually be the case if we get a correction in the precious metals over the next little while.
Well, regardless, even if we see the metals prices pull back, I think both gold producers and silver producers are finally making some hay while the sun is shining, Peter. There's pretty good margins. There's been margin expansion. And if we focus on just silver, a lot of the producers really need something above the mid 20s to really break even the higher cost producers. The lower cost producers have already been making money. But when you see silver poke above 30, and then in this case above 32, they have margin expansion. So I'd love you to break down how you look at the producers, both the low cost producers, I guess the best of class, and then even sometimes the torque we see in the high cost producers, maybe the ones that don't produce an ounce of silver for as good of a price, but sometimes they can have a larger percentage increase in their margins.
You're absolutely right. And so that's something that may be counterintuitive to investors. So there are a handful of, as you say, lower cost producers, and they've been making money for quite some time because their costs are probably in sort of the low teens to mid teens. So, this is almost a 50% margin, especially if you're looking at sort of cash costs. Even all-in costs could still well be, below $20. But there are some that will produce with much, much lower margins. And so because their margins are thinner, any dollar or cent that gets added to the silver price, if their costs don't change, and this is, what we consider just for comparison purposes, but if their costs don't change, then an extra dollar of silver price for a high cost producer is more meaningful. It has a bigger impact. Again, if the costs don't change, that full dollar is a much bigger percentage gain on profits for a high cost producer than for a low cost producer. Their profits were already large per ounce of silver sold. So an extra dollar of silver is nice for them, but has less impact. The high cost producers see a much bigger impact from that. And so that's something to consider. And, we talked about this before we started the call earlier, but we can see some of those companies really, really run when the silver price moves up and stays up because, as I say, the impact to their bottom line is leveraged. So, these are things to consider. If someone is allocating or looking to allocate now, they're both interesting. I would say that more than anything, it probably depends a little bit on someone's risk tolerance, their outlook, their level of patience, etc. And so that may be how they make a decision in terms of how to allocate to these different levels of profitability in terms of producers.
Well, maybe just following up on that a little bit, when you're constructing a portfolio or, when you're talking to people, it does depend on their risk tolerance because some people may not have the stomach for the volatility in the higher cost producers. But what do you think about a blended approach? Just off the top of my head, Peter, I'm thinking of, some of the lowest cost silver producers are producers like Silvercrest, Mag Silver, Pan American, Silver Corp. Some of the higher cost producers, companies like Impact Silver, Santa Cruz Silver, Endeavor Silver, Guanajuato Silver, would you have a blended approach where you weight the lower cost producers higher and then maybe pepper in a few of the little ones? Would you go all in on the torque that the higher cost producers could provide if you had that inclination, or would you think that most people are better just betting on the safer bets that they're going to be making money? I mean, how would you look at a blended approach?
So, I personally feel more comfortable owning some from both of those categories. And so I do use that blended approach. But I could see where if someone has lower risk tolerance, then you know what, they will do just fine with some of these larger producers over time if they do have a long time frame. Give you some idea, and I have this actually in the book. Two of the sort of largest market cap silver companies are Wheaton Precious Metals, which is not even a producer but a royalty streaming company, and Pan American Silver. And so at different points in the last bull market, which was from about 2001 to 2011, both of these companies offered anywhere from about a 15 to 1600% return. So that we're talking about 15 to 16 times on the price in a matter of, and it varied. One of them would have been, I think, in a matter of maybe a couple of years. The other may have been over a matter of maybe 3 years. But that is some serious torque in some of the lowest risk companies, the highest market cap silver companies that you can invest in. And so you really, if it's at the right environment in terms of the silver price gains, et cetera, you don't have to be exposed to the highest risk names to do really, really well. And that's absolute clear proof of it.
Yeah, I think that's a good point. And I think sometimes people have gotten into such a crazy speculative fervor, and people have been speculating on drill plays or swing for the fences, AI stocks. They want to see the crypto gains. People want a multi-bagger returns and they want them tomorrow or in a couple of days, that they forget if they just wait out in some of the quality names in a real bull market, they could still have outsized returns compared to what you could get in most other sectors. So definitely some food for thought there. We did see a consolidation in the space, Peter, which is exciting because there hasn't been a lot of silver M&A deals, but we did see Gatos Silver taken over by First Majestic. Now, Gatos Silver had a pretty good run the last couple of years, but First Majestic was looking to grow, and I wonder specifically about this transaction. What did you think of the strategy for First Majestic to bolt on Gatos, and is this the harbinger of more M&A deals to come?
So I really like it. I think that First Majestic needed that shot in the arm. It, had been, I'm going to say in quotes, struggling a little bit with their Jarrett Canyon project that they had put on care and maintenance. They were having issues trying to make that profitable. And plus it was gold production versus silver production. So I'm really happy to see this. Unfortunately, it gives us maybe less choice to invest in the silver space, which was already pretty narrow. But nonetheless, I think this is a good move overall. So Gato shareholders will get about 2.5 shares of First Majestic. It's an all-share deal. I think that it's very fair because First Majestic pays really just 16% premium for Gatos, and they value it at almost $1 billion US. So after the deal, Gatos shareholders will own about 38% of First Majestic. It's going to make for a new company that's going to be producing about 30 to 32 million ounces of silver equivalent, about half of that, so 15 to 16 million ounces of silver every year at an all-in sustaining cost of, here you go, $18 to $20 per ounce silver equivalent. So that's pretty good. That leaves some great margins, and that's some pretty sizable production. Now, a couple of other things. One is that it will help the new company get a lot of this cash flow that was inside of Gatos to the tune of about $70 million free cash flow a year, which is very good for First Majestic. And if I have this right, I think it's going to shift the overall revenues from silver, which is an important filter and an important characteristic in my view, because I consider these to be silver companies, but so many of these so-called silver companies don't produce all that much silver. In any case, I believe once this is consummated, that the new First Majestic will have more than 50% of its revenues from silver. So I think that's also very important for people to consider. We're also going to combine not only their production, but their land packages and their exploration potential. So this is going to reach, I think, a total of something like 350,000 hectares of prospective land. These are also in areas where there's a history of exploration and economic discovery, successful economic discovery. So I really like it. I think that it's wonderful. It makes for a bigger company, which something that maybe people haven't considered is that this is going to be a market cap of about US 3 billion. And especially if if you look at public companies from the US perspective, that's probably not considered all that big. But what it does is it helps to bring this company into the sphere of many institutional investors because of its larger market cap. And so that may make it accessible and investable for funds that prior would have had to automatically avoid either stock because it was just too small. So I like it. I'm glad to see it. I'm really excited by it, and I think that it's going to help drive more of this in the sector. So yeah, I think that it's a great thing to see happen.
Yeah, and I think you made a couple of key points there, Peter. One being that now that they've massed up in size and market cap, it does maybe open it to a wider universe of funds or investors that maybe wouldn't have touched it at a smaller market cap. And it is kind of funny. I think that would move them into a senior company in the silver space, but in the overall spectrum of US equities, it's still a micro cap company to most people, even being $3 billion. So we hear that in the mining space and say, oh, wow, that's getting to be a big company. But to some of that's in tech companies or some of that's in, large retail companies, they may look at that and say, wow, what a tiny little company. So even though it's one of the bigger ones in the silver sector, pro forma, it's still small in the overall equity universe. Do you think that more M&A needs to mass up just for those very reasons, bigger and bigger companies to attract that generalist investor?
Yes, I do. And you're right. I mean, at $3 billion, this becomes almost a rounding error for some of these bigger companies. So, but yes, hopefully it does bring it into the investable sphere for some of the fund managers. Yeah, I think we are likely to start to see more of this kind of thing happening. I mean, mergers and acquisitions, of course, are exciting, but I do see also silver producers that are starting to maybe help by actually divesting from some of their projects. There was a recent announcement that Apollo Silver is going to be acquiring the Cinco de Mayo project from Mag Silver that has been dormant for over a decade. And from my understanding, this is a pretty high potential. There's a lot of metal in that deposit and a lot of exploration upside that needs to happen. And there's also Aya Gold and Silver, which recently announced that they're going to spin out two of their projects. I think they're both gold projects. So that's interesting and I think appropriate because Aya, at least from my perspective, is more so a silver producer. And their existing production is almost all pure silver, extremely rare. Their stock, by the way, has been doing fantastically. I recommended it about a year and a half ago at $8. I wish I had gotten in earlier because a few years before that it was 3, and today we're at 18. So my subscribers, thankfully, only a few weeks back, I told them to take profits, and so they were able to lock in a 100% gain. And the idea is that you sell half, you have your money back, and then you continue with exposure on the upside, hopefully, as you continue to hold the other half of your shares at no risk. So they're spinning out two of their gold projects. One's in Morocco, the other is actually in neighboring Mauritania. And this new company is going to be called MX2. They're going to contribute these two properties. They're going to invest $1 million and they will own 30% of the shares once this goes public. So they will have two representatives on the board. And I believe it's two members of the IA management who are now actually going to be running this new company. So I think it's great to unlock value. They get to benefit from this hopefully higher value given to these projects because the market can clearly see them in a new company and attribute a value. And they can concentrate on silver more specifically, which is, I think, a good thing because over time these things tend to distract the company. You might as well spin them out and let their value be recognized by the market. So that said, yes, there's M&A. I think that's going to continue. I think some companies are ripe for it, but we're also seeing divesting going on. And I think that's, if it's done right, it's a good thing. It can be really good, really, in many ways for both parties, the divester and the acquirer of the new project.
That's a really interesting angle, Peter, because we've seen that a lot more in the gold sector, where you've seen Newmont kicking off assets. I think they're still getting ready to divest some of their non-core assets. But what's non-core to a senior like a Newmont in the gold space could be very core to a junior company. And we saw that when I think it was Barrick that kicked off the property to K92, and then they took it and ran with it. So you have larger companies that want to grow by tacking on larger companies, but sometimes they'll spin out or spit out to the marketplace other projects. And it makes me think of what we just talked about with First Majestic. First Majestic had bought Jarrett Canyon, the gold mine. It didn't go as planned. It was kind of in the penalty box for it, but now it's made a big acquisition. But First Majestic also spun out its La Guitarra project to a company called Sierra Madre Gold and Silver. I'm not sure if you're familiar with it, but they
Oh,
basically
for
got
sure.
the First Majestic project that wasn't core to them, but First Majestic said, "Hey, I don't want cash for it. I actually want equity in your company because I want the upside you have. It's just too small for us, but it'd be great in a junior." What do you think about that? Juniors that try to capitalize on these spin outs or on these divestments. And you could make the same case that Guanajuato Silver launched its production profile by grabbing a non-core mine from Endeavor Silver, El Cubo. Same kind of idea. What do you think about this idea of junior producers taking these assets that are non-core for the larger companies, but trying to make a go of it as a smaller company?
Well, you mentioned Sierra Madre, and that's actually one that I follow that's in the portfolio. And I like this company a lot based on many things, including the fact that management is serially successful, even successful in other resources, other metals right now. And so, yes, they acquired the La Guitarra project from First Majestic, and they have had some really good news very recently. In fact, just a few days ago, and this is a junior. So remember, a junior, and they just noted that they generated $2.4 million since test mining began in late June. So that's really pretty impressive. And they continue to grow their throughput rates at the mill. And so they're at 350 tons per day over the past month. They're looking to reach 400 tons per day and then 500 tons per day by the end of this year, which would be official commercial production. So I think those are smart moves. That means cash that they don't have to go back to the market for. They can continue to, yes, they will focus on this for a while to help build it up as much as they can. Perhaps it will distract them for a little while from exploration, but at least when they get back to exploration, there's much less of a need to go back to market to be raising funds and through private placements and so on, issuing shares. They'll have this cash flow. So yes, absolutely. Very interesting. I'm trying to think there are a couple of other companies that have been doing that, but that's the big one that stands out for me. What I also like about Sierra Madre is that the guy who's in charge of running this mine is Greg Liller. So Greg Liller actually ran the mine when it was in production under First Majestic. So you could not ask for someone better inside of Sierra Madre to now be running the mine today. They have all this historical information in terms of throughput, costs, et cetera, et cetera. And then they have the guy who actually ran it. So, when you look at this kind of a setup, the odds of success are certainly clearly much higher than perhaps in other instances. And I think that people need to look at these kinds of things when they evaluate a company. And I've been saying for some time that it's been undervalued. And we're starting to see its price move and it's starting to really climb back up. And that is actually not surprising me. I think it's very much deserved, and I think it has a lot higher to go as well.
Yeah, it's an interesting company. I actually met with the CEO, Alex Langer, in Beaver Creek and had a great discussion. And I didn't realize that they were even in trial mining and going into production yet. And when I first met with them, I said, I just haven't kept up with the story. And then we were talking about the exploration upside on the land package and how much sunk cost that First Majestic had already put into place. And so sometimes you capitalize not just on a good asset, but the fact that the larger company maybe has done a lot of the heavy lifting for you already. And if you can keep and retain staff that already is familiar with the project, you're not starting from scratch either. So just an interesting idea there on Sierra Madre. We'll try to get them on the show sometime soon just so we can get an update from the company. But let's pivot over to the developers and explorers. Any news
Mhm.
on your radar, Peter, that you think some good work being done by the juniors, either on the development side or the exploration side?
Yeah, so actually, I think we've talked about these guys before, but AbraSilver, I'm excited about Abra for many reasons, but one of them I think that is really because of jurisdiction. They are in Argentina. They're in the best mining jurisdiction in Argentina, which arguably has not really been too badly affected by previous administrations of the national government. But now they're really getting a shot in the arm with the new guy, Javier Milei, who is really opening the country up to trade. And it's the impact of his new policies and of removing restrictions has been just tremendously positive and in a very short time. Nonetheless, AbraSilver is in the middle of a drill campaign, and they've been getting, I mean, I'm talking about holes that are providing, these are step out holes. You're getting grades like 31 meters of 277 grams per ton silver. Within that, you have 13 meters of 455 grams per ton silver. And then to farther out target as well, something like 53 meters of 110 grams per ton silver, 5 meters within that of 339 grams per ton. So I'm excited about companies like that. Trying to think. Oh, yes, in terms of other exploration plays and things that we can look forward to. Well, one I think I continue to mention that as one of my favorites, and I think continues to fly very much under the radar. I think people do not recognize the quality of their projects in many ways, in terms of results, in terms of potential, and in terms of jurisdiction. And this is Summa Silver. So Summa is the essentially the I'm going to say in some ways the mirror of BlackRock. They are basically quite literally across the highway from BlackRock's Tonopah West project in Tonopah, Nevada. So they're across the other side of the highway. They have, in the last year or so, done this is their Hughes project in Nevada, and they have done step out drilling that has gone as much as, I believe it's 4 to 5 kilometers. And they are using some pretty advanced, technologically advanced methods of evaluating targets. It seems to be working for them because they are getting multiple meters of very high grade silver. And so they've reevaluated all of their data, geophysics, etc., and including drill results. And they're very close to announcing more details on their upcoming drill campaign on the Hughes project. And so they're going to basically tell us where their targets are, where they're going to be drilling. And I think we're going to be quite impressed with the upcoming drills. It's going to take a little while because they have to still finalize everything, get those drills there, get the assays. So we're a few months away, but I think any weakness in Summa Silver makes for probably a very good play. I'm going to qualify that again. This is certainly higher risk. They do not have an economic deposit, but what they do have are some compelling and ongoing strong results from drilling. I think that it's a matter of time for them to simply, do enough drilling to eventually come out with an economic resource. It's, I think, all but said already.
Just a quick follow-up on Summa Silver, because you seem quite familiar with it, Peter. They have another project in New Mexico called Mogollon, and sometimes they've had some really bonanza grade hits there too. And so when I've talked to other people about Summa, they're like, I can't figure out, is this a Hughes story, in Tonopah next to BlackRock Silver? Because BlackRock Silver is a little more advanced where they could be a closeology play, but it's really probably all the same mineralization there in Tonopah. Just because there's a road that divides it doesn't mean that the mineralization carries underground. It's probably all connected into one larger system. Or is this a New Mexico play with Mogollon because they have this other, and I don't even think the company themselves has clarified which one's really their flagship. So how do you look at that with Summa Silver?
Well, I'm going to say you're right. And I consider them to have two flagships, frankly. I think that they're both really very good, very high quality, very high potential. And I think that, we talked about M&A and divestiture, et cetera. What I could see is that for whatever reason, frankly, I'm not even sure which one has the higher odds of it, but I could see at one point if one or the other project, takes on enough significance, grows enough on its own that they could perhaps end up selling one of those to someone else. Now, if you look at what they have, we just talked about Hughes, and that's a neighbor to BlackRock's Tonopah West. Naturally, that one looks like the more obvious for it to somehow be combined with what BlackRock has. Who knows? I have no idea if that's going to happen. I'm just saying that sort of looks like the most natural. But for all we know, perhaps they will continue to grow Hughes, grow it more quickly, and decide that they want to focus on that. And perhaps at some point they'll sell off Mogollon, which, like you said, they've been getting some tremendous results there. Also very impressive. So honestly, I don't know. Right now, I don't choose. I just say these are both flagships. That's the way I've always presented it. I think they're both very high quality projects, and I'm happy to have, not one but two such high quality projects in one company. And I think that's maybe that is a bit of an overhang. People don't have a harder time understanding them, but I just think that leads to, for now at least, that just means that, shares at say 43 cents currently is an even better value. At some point, a lot of that's going to get unlocked. And I see it almost as a win-win in the sense that, again, I've said it several times, but you have two top-notch projects in one company. One top-notch project in a company is honestly rare these days. To have two is tremendous. And I don't spend too much time thinking about how that will play out. I'm just happy to own it and have those in there.
Yeah, it gives you two swings at the pinata for the prize inside, and whether they decide to combine with BlackRock Silver, the two projects together in Tonopah and spin out Mogollon, or focus on Mogollon and sell the Hughes project, they've got optionality because two good projects gives them choices. And so we'll see how it develops, but just wanted to get your thoughts on it. And one more
Sure.
thing I'd like to get your thoughts on, Peter, is just your key takeaways from the Metals Investor Forum. You were just there in Vancouver, I believe it was last weekend, and just there's always a buzz of activity. You get to interact with a lot of investors, a lot of other newsletter writers, a lot of other fund managers and thought leaders in the space. What were the key takeaways from the MIF?
Yeah, so there is a buzz. People are interested, they are excited. We talked about this at the beginning of the call. Probably a lot that has a lot to do with the fact that gold is at or near all-time highs, silver is back above $30. And so people like that, but they recognize too that for the most part, not exclusively, but for the most part, a lot of corresponding equities, especially the juniors, have not participated in a lot of that. They have to some extent. Most have risen somewhat, but not nearly as much as they normally would. And so that sort of is, I think, weighing on investors because it's a patience game. But it was interesting and nice actually to see that people who are interested in this space continue to want to stay informed, to continue to educate themselves. They ask great questions. I can tell you that in the presentation hall, there were probably, the capacity was probably filled to the tune of about 80% most of the time when companies and newsletter writers were speaking. And so that is really nice to see. That tells me that we may not be at a bottom, which is usually not the case because the rooms are almost empty at that point. It wasn't standing room only, to be fair, but quite a considerably high level of interest, and I think that's encouraging. I believe we're going to get before too long to a point where general stocks, the broader markets, are going to take a turn for the worse. And I think that there are odds. I mentioned this in my talk at Metals Investor Forum that I think if you look at the last couple of rate cutting cycles, they preceded the start of a recession by about 3 to 4 months. We just got a big rate cut. And if on that basis, if history repeats or even rhymes, then, mid-December, mid-January could be where a new recession actually comes along. The market is a discounting mechanism. It sees that usually as much as 6 months in advance. So hard to say about timing, et cetera, but we could very well, we've had perhaps as much as 40 years of a not completely, uninterrupted bull market, but we are at near all-time highs in stocks. And I think that we are very, very much due for a secular bear in stocks. And so, the smart money is going to be the first to recognize it and to rotate, especially fund managers that need to prove up and get their bonuses. They're going to look for the deep value. this was not at MIF, but I'm not sure if you know of the fund manager Ronnie Stoferle, who's with Incrementum, and his group puts out the Ingolby Trust Report every year. And I think it was at Beaver Creek he was interviewed, and I saw the interview on YouTube, and he made an interesting comment that he was at some kind of a cocktail or party not too long ago with his wife, and some guy comes up to him and says, what's going on with all these large gold producers and precious metals producers? And he kind of looks at him and says, well, he's asking himself, what do you mean? He looks at his wife and thinking, what is this guy, what's he driving at? And so the guy basically, he was a fund manager, and he basically admits to him that he says, I'm loaded up on this stuff. And so he gets even more suspicious, and he says, okay, explain yourself. And he said, hey, I'm a deep value fund. I cannot find better value in the market than this. There's a really interesting chart that I had actually in my presentation by a guy by the name Tavi Costa, who's with Crescat Capital. And Tavi puts out some excellent research. And one of his charts shows all the major sectors in the S&P, including not an actual sector, not an official sector, but he was through Bloomberg. He was able to group all the precious metals producers that are actually listed on the S&P and say, if they were an index or a subsector of the S&P, what would they look like? Well, believe it or not, the precious metals producers have the highest cash flow margins of any sector in the S&P right now at 40%. They easily surpass any other sector in the S&P. That is tremendous value. And when the market turns, a lot more people are going to start to recognize that. And, that's going to start to push up their valuations naturally. Some of them already offer fantastic yields, to the tune of 4 or 5%, which is incredible. And, their share prices are going to move up, and they're going to start to realize, oh, okay, well, wow, my shares are really a lot more valuable now. I can start to use my shares as a currency to go off and buy other companies, smaller companies that have proven up very profitable economic deposits, and I can start replacing my depleting reserves. So I think that's what we can look forward to over the next couple of years. And that's going to filter down, obviously, first to the smaller producers, and then the growing producers and developers, and then eventually all the way down to the juniors. So there's some tremendous value to be had. And I think we're going to see it play out that way.
All right, well, we'll wrap it up there, but some great points, Peter. And yeah, the deep value fund starting to look at the precious metals producers and just the fact that they are cash flowing so much, I think it's going to get on the radar of more and more generalist investors, analysts, especially after we see the Q3 numbers, because I think the sector is going to have a whopping third quarter based on where metals prices were. And maybe that gets more people looking at the precious metal sector that haven't looked at it before. We'll keep following along with it here at the KE Report. And if you want to follow along with Peter and get more information, definitely check out the book he wrote, The Great Silver Bull, and check out the link below this interview. It takes you over to Silver Stock Investor, and you can get Peter's analysis on the silver space and his own thoughts on the companies that he tracks and follows. And Peter, great to have you on the KE Report. As always, looking forward to our next conversation.
Thank you, Shad. Always enjoy it, and I look forward to the next one as well.